So here we have our Interactive Brokers platform. We're going to look at a live example of a stock repair strategy. So we're looking at EWZ. You can see I've got 200 shares at an average price of 28, and we're currently trading just below 24. So I'm down about 15% on the position. So what we could do, don't really want to add any more capital to the trade, to the position. So I'm going to look at a stock repair strategy. So we'll add some options in here and we'll have a look at what we can do. Alright, so I might go out to sort of January. It gives me a couple of months. And I want to add some at the money calls and some calls at around 27, 28. Okay, so we can see the $24 calls are trading at around 140 and the $28 calls at around 30. So my long call is going to cost me about 144, and the short calls, if I do those, I'd sell 2 of those. It's only going to bring in about $60, so it's going to cost me about 145 there. I'm going to bring in 60. The net trade is going to cost me about $80, so not going to be able to do it for zero cost, unfortunately. That's what would be an ideal situation. But to trade it for only $80, it's not too bad. I'd prefer to be bringing in a little bit more credit for this one. You know, what we could potentially do is go into the $27 call. We'd bring in about $90 for that one, so the net trade would cost us only about 50. So those are my options at the moment. What I'll do is I'll go to the Risk Navigator and take a look at the position. So here is my stock position. So this is my profit and loss graph for that. Obviously just a straight line. Need it to get back up to about 28 to get back to break even. But what I want to do with the stock repair strategy is try and reduce that break even a little bit. So I need to get back about 750, 760. So let's add in our options. So January 24 and let's do 27. Bit annoying having to do this one by one. And 28. Alright, so I definitely want to buy one of the, like, so I've got 200 shares, so I'll probably do 2 and then I would sell 4. Okay, so let's change that to January. Okay, so this is what my new graph looks like. So we can see on the downside not much change. So this trade's going to cost me, what's that, 290, and I'm going to bring in about 120. So it's going to cost me about $170. So that's the only extra risk that I've got in the trade. And I need to get about 750 in profit. So that has brought me my break even back to about 26.5 from 28. And if it does, the stock does manage to recover to 28, then I've actually got a pretty good potential gain in the trade. So I actually do like the look of this, and this is something that I might do in my account. But that's a little insight into how the stock repair strategy works. We'll maybe take another look at Apple. Let's just, out of interest. So Apple trading at 116. Let's assume maybe we got in at, let's say, 130. Let's try going out a bit further in time. So let's go out to April 16. We'd want to buy an at the money call and we'd want to sell the 130s. Alright, so we'd want to buy one of those and sell 2 of those. So going to cost us about a bit under 900, and we're going to bring in about 600. So let's take a look at how that would look for us. So bring in the 130s as well. Alright, we want to be looking at April. So let's say we had, we need to add the stock as well. Let's say we had 100 shares of Apple. That's what our stock graph looks like. So change that to Apple. We need to get back to about 130. So we need about $1,500 to get back to break even. So what happens when we buy one of these and sell two of these? So brings our break even, 1,500 on the left there, you can see brings our break even down to about 125. So not a bad looking trade if you wanted to sort of get back to break even, and looks like it actually has a little bit of potential profit in the trade as well.
Okay, thanks for watching. I hope you enjoyed this video, and remember to head over to optionstradingiq.com for more great articles and videos.